What's up, guys? We are back with another episode. You already know this is You Can't Sip With Us, and I am your host, Z, of course. As you can tell by today's title, we're going to be talking money, generational wealth, assets, portfolios. We're going to be getting into all of that today. But first, of course, we got to do our mindful moments. My mindful moment is going to be I did an episode on healing recently, and then something just said do some healing work, or maybe I was just needing maybe to find something that I was missing just in life or something. But it was just like figure out what you need to heal. So I took some shrooms and I figured out what I needed to heal. Yeah, I actually feel good now. I know what I need to do. I haven't done it yet. I've been busy since I guess I found out what I need to do. But found out what I need to do. I'm gonna end up doing it, and hopefully I feel a lot better after I heal and do my little, I call it ritual, but do whatever steps I need to take to get it together. So that is going to be my mindful moment. And as you guys know, after we do our mindful moments, we get straight into the drink of the week. So, the drink of the week this week is going to be called Blood Money. Of course, we're talking about money and finances, so we're just going to make the drink of the week Blood Money. But as you guys know by now, the recipe will be posted along with the video on all my socials, so you guys can follow and make the drink at home and you can sip with us. All right, so as you guys already know, it is the holidays, holiday time, holiday cheer, or whatever you want to call it. But it is the holiday, so we're gonna go ahead and talk about wealth. It's going to be structured a little different than what the normal podcast is structured like. So instead of really asking questions, I'm going to be mainly informing you guys and talking about a little bit of things that I feel like everyone should know as an adult, or just as someone who is interested in building generational wealth or just building wealth in general for them. Make sure for this episode that if you guys need a pen or a pencil, notepad, or go ahead and get that now. You can pause the video. It's going to definitely be some good things in here that you can take away, whether you can retain it by just listening, but I really feel like you should write this stuff down or go back and listen to it and write it down when you have a chance. So let's go ahead and get into it. The first thing that we're going to talk about is the most valuable thing one person can have in their possession or own, and that thing is going to be land. Land is the most valuable thing that anybody can have. It appreciates over time. You can use it as far as trying to get loans, or you can even just pass it down to your kids. And it also offers tax benefits as well too. So land is the most valuable thing you can earn. The question is, if you could own land or a house anywhere, where would it be? Me personally, anybody who knows me knows that I want to live in Georgia. My property, my house, whatever that I buy land-wise will be in Georgia. So that's where I want to build land at. And I heard that it's a lot cheaper out there. So yeah, that's where I would be at. But it does come with cons as far as like if anything breaks, you have to fix it. You have to make sure when you buy your house or buy land that you own mineral rights. Mineral rights is the ground that's underneath. Okay, so you may not know that you have diamonds underneath. You may not know that you have oil underneath. You may not even have that stuff. You know what I'm saying? But if you do, you need to make sure that you own the mineral rights, the land rights, all the rights to that land, property, house, whatever it is that you're doing. Make sure that you're looking into that and make sure that you own that. Because if not, the people who do own it, or if the government or somebody owns it, I'm not sure if they can, because they own it. So technically it's theirs. But I'm not sure if they can pay you for it since you own the land that's on top, or if they just have to figure out a different way to get to it without messing up your property. So that's different things that you can look into that I found out that was different. So I feel like all people should know about mineral rights, full land, mineral ownership, mineral, okay, like rocks, diamonds, all of that. Y'all should look into that as well when you're buying a house. Make sure that it comes with it. I seen that it said like most southern states like Oklahoma and Texas, they have it to where sometimes it's sold separately. So make sure that you look into it and make sure that it's included into the deed. The next thing is, did you know that land appreciates? So basically, it's making money for you. So for sure, that's what equity is. I don't know how to explain it, but that's what equity is when the land appreciates. I believe that equity is like the value that you make off of it. Like after all the upgrades, I believe that's what equity is. It can decrease and depreciate over time too. It just depends on what you're doing to the home as far as like renovations and repairs, and if you're keeping your upkeep on it, and then also the land and the homes and neighborhoods around you. All right, so this next one is going to be about networking. I feel like networking is something that's very important to wealth building because more more times than not, it's always going to be more of who you know, not what you know. So you always want to know somebody to get you somewhere, or you always want to know somebody who can maybe help you with something that most people can't help you with. So for me personally, I've used a person that I've known twice at least to get a job. Like I know them, I'm coming in at a high position, high salary, and they put me on basically. So it's like it's more about who you know. Never burn bridges. Me personally, everybody be thinking that I'll be burning bridges, but I don't. I don't burn bridges with people who I feel like I may need later. So as far as like the people who I've had burned bridges with, I know it's just because I don't need you later. You're really not good for me in life. And but networking for sure is important to build wealth, especially when you surround yourself around people of wealth. You tend to become more wealthy yourself. You tend to start picking up on certain things. There is a saying that I've seen about networking. It just says money moves fast, but it always moves through people, which of course that's the only way that money can move, through people. When is the last time you told somebody what you actually bring to the table? So as far as like networking and saying like what you bring to the table, it's how can they benefit from you and how can you benefit from them? So if you're introducing yourself to somebody and say you're out at a networking event or you're just out at a club, they're like, oh, what do? You tell them what you're doing. That's you networking, but you can make the most of that opportunity. So by networking, are you just telling them like, hey, here's my Instagram, or hey, here's my social media. This is where you can find me and reach out to me? Or do you have like business cards? Do you have like a website? Or do you have a phone number to where they can call you, an email to where they can email you and reach out to you personally? Like more of a structured business. Like, do you have that? Or are you just networking and being like, hey, I know this person, I know that person, but you don't really know these people. You just know them from a passing by experience. So for sure, as far as like examples of what you would bring to the table, for me, I'm a podcast person. I bring to the table is I know how to edit, I know how to record, I can come up with questions, certain things like that. I can bring that to the table. Maybe if they have a business and they are struggling, or they're looking for a new audience, or they're looking for whatever that they're looking for. Okay, you can come on my podcast, you can talk about your business, you can do X, Y, and Z. That is a connection that may turn into something more, you know. And that if a person that I'm looking for has skills doing videography, that's something I need help with right now. So if y'all know how to video and edit and stuff like that, hit me up, okay? I'm willing to pay. I need help. Show me how to do it though. That's what I'm looking for right now. It's like an exchange. That's what networking is, and that's what you offer and bring to the table. If you're just networking and you say, "Hey, just hit me up on Instagram," that's really not networking. That's just really like a fast-paced exchange, and you're really not doing nothing. They can go back maybe later and see your page and see what you do and stuff. But as far as in that moment, you need to make every opportunity count. You need to make yourself memorable. So a lot of the times, if you're really serious about it, you would have business cards. I usually have business cards, but as far as like right now for this podcast, I don't. I did say that I was going to get some, but that is one thing that for me personally stops me from going out and networking because I don't have business cards, and I feel like that would be a little quick. Here's my business card. This is what I do. Hit me up if you got a story to tell, X, Y, Z, however, you know what I'm saying, I'll promote myself. and put myself out there. But networking is important, especially if you want to build wealth, if you want to build your own business, if you want to do anything like that, be out, have a platform, whatever. You have to network. People have to know you. You can't just be like, hey, I'm here and nobody's knowing who you are. All right, so the next one is credit. I feel like credit is something scary that a lot of people are scared to do, especially like the 18-year-olds. But to be honest, when you're 18, that is the perfect opportunity for you to start building your credit responsibly, should I say. That's a lot of the times where they'll give you a $5,000 credit limit at 18. So it's definitely a great time to start building credit. But where a lot of people mess up is they don't know how to use it. They don't know nothing about credit. They just like, hey, I got $200. Oh, okay. I got $500. So on and so forth. I got $2,000. I got $10,000 to spend. If you don't have $10,000 regular account, what in the fuck makes you think that you can go and run up $10,000 and pay that shit off? Like, that's what a lot of people don't understand. That's not what you have, it's what you basically can afford. And it helps, like you said, to build your credit. So, one of the questions is when you first heard the word credit, what did you think of? Did you think of like loans? Me personally, the first thing that I thought of was a car. Like, I don't know why, but for me, a lot of the time, credit was associated with the car. I guess maybe that's just how I was raised or where I was raised. Anytime they talked about credit, it was always just about a car conversation. I never really too much heard it other than that. Until I got older, should I say, and kind of knew what it was. Credit is basically a tool that can work for you and that can help you get to where you need to go. That's the number one thing most of the time, because if you don't have credit, you really don't have nothing. So good credit is better than no credit. So for me, what I would tell like an 18-year-old or anybody who don't have credit, they looking to build credit no matter what your age is, or you're even trying to get your credit back up. I would say go get a secured credit card. Okay, go get one of those. I believe all banks have it. Um, all banks should have it, a secured credit card. If not, Chime does have that program to where you can get a secured credit card from them. Basically, what a secured credit card is you preload a limit. Most of the time it's like 200, 250, something like that. It just depends, varying on the bank. With Chime, it's just whatever you put in there. So like if you put $5 in there, you just got a $5 limit. But it's whatever you put in there, and you can basically spend it up into whatever amount. So we're just gonna say 200. So if your limit is 200, you put $200 in there to start the account. It's probably gonna be 205 because it's like a $5 fee to start the account. But $200, that's your credit limit, and you can swipe it up into your $200. But what people think is, okay, I can use the $200, swipe it, pay it back, put $200 back on there. Yeah, no, do not do that. I learned the hard way. Do not do that. So you have credit utilization, and credit utilization is basically how much you spent versus how much you got left, or how much you got total, however that works. But that's basically how much it is. You do not ever want to go over 30% of your card utilization. If you do, it would ding it on your credit is bad because they're just like, it's high risk. That's high risk. Why are you spending the entire thing? Because that's not what a credit card is for. Credit card is basically for emergencies. So you'll never want to spend over 30% of your credit card utilization. I've had to learn that the hard way, like I said, because I thought, okay, I can max this motherfucker out, just pay it off, and that's going to be the credit. No. No, that's not how that works. I mean, you can do it like that, but it's not going to build your credit that way. It may either ruin your credit or drop at some point, depending on how fast you can pay that shit back. But for sure, credit utilization, get you a secured credit card. A lot of people go out and get cars and stuff like that. You can do it, but I don't recommend it, especially at 18. I don't recommend it for you to go out and get a car in your name on credit. I don't recommend that at all. If you feel like you can do it, then go do it, sister. You more power to you. I wish y'all the best, but to be honest, anything can happen. You may have enough money for it now, but later on in life, you may not have enough money for it, and you want that motherfucker to be paid off. So I wouldn't do a card. I would do a secured credit card, like I said, and build credit. That way, it does take a long time to do it. Maybe you can go to a furniture store, go get something for like $600, put that on credit, and pay that off monthly. That's the only thing that I could think of. I would never go and get anything over $1,000 on credit if you're just starting out. It also says how long does it really take to build credit. So for me, I would say I started building my credit when I was 18. I heard about Credit Karma by the time I was like 19. I think that's when that came out. I had a 700 credit score, and I want to say from like it took me probably like 2 3 years. I would say 2 3 years, 3 years max to get from probably a six something to a 700, or maybe it was like five something to a 700. But me personally, I had ended up getting a credit card, and then I also got my car on payments. So that's why it took me about like 3 years, and I got a 700 credit score. Now, on the reverse side, to lose and fuck up your credit, it can take less than 6 months. You can fuck up your credit in a month. You can fuck up your credit in 3 months max, and you can drop tremendously. Like, that can really ruin you. It's so fast to freaking ruin your credit, but to gain it all back is so fucking hard. It's really not hard. You can really, whatever ends up happening on there, you can really pay it off, except for like hard inquiries, and hard inquiries are basically when financial institutions are checking your credit. So if you go to apply for a car and they need to run your credit to see what kind of car that you can afford, that's them running all the finance companies up against your credit, and you're gonna get hit for every single last one of them. Those only last 2 years though, they'll fall off after 2 years. But yeah, anything like evictions, bankruptcy, I don't know what else as far as that can go on your record, but anything like that or similar to that, that stays on there. It's a repossession. That's another thing. That will stay on there for 7 years. Anything long term will only stay on there for 7 years. After 7 years, it'll just fall off as like nothing happened. During that 7 years, though, I would recommend to not interact with that creditor if you're not gonna pay his shit off. Don't interact with them, because every time you interact with them, every time I think the debt gets sold or something like that, will basically restart and reopen up, make taking it longer to fall off your credit. To be honest, we're the only country that has a credit score. I think other countries use a different kind of system. Also, another thing is the length of your credit history is also a major factor. So for me, my credit history may be longer from others. My credit history right now is longer than my best friend's credit history. It was at a point in time where she didn't even have a credit score. It was so low. So it's your credit history is basically good. The longer you have credit history, whether it's good or bad, but the longer you have credit history is the better. The more recent your credit history is, less opportunity for loans. You're gonna get denied most of the time, or you're gonna have like a high APR. The thing, because if you miss a payment, if you miss 30 days, it'll count that. If you miss 60 days, it'll count that. So it just counts every time you miss, 60, 30. And I think some things go up to 120 as well, too. But yeah, it'll count that too. As far as like repossessions, I done got my car repossessed twice, and it didn't hit my credit. It hit my credit as far as like however many days past due, 90 days past due. But I always got my car back, so it never like hit it as a repossession. But I gotta pay them fees. That's what's getting me now. So y'all pay y'all car notes on time. Another thing about credit is that I didn't know, that I feel like people should know, is you can basically put your kids on your credit if you have. I'm not gonna say if you have good credit, because you can put them on your credit even if you have bad credit. But I would not recommend that. And don't set your kids up for failure like that. That will be just disrespectful and diabolical as hell. But as far as you putting your kids on your credit, say you have a 700 credit score by the time you have a kid, I think even like once you have their social, I think you can put them on your account. They will have a card in their name. They don't even have to use it. It can just stay there, stay put up or whatever, and you just keep going on about your day. So now by the time they're 18, you have a freaking, you done maxed out. You have an 850 credit score. And by the time they're 18, their credit score, I'm not really sure if it will be the same, but their credit score will be high as hell as well because you have good credit. You put them on your credit line, what we're going to say, and now they have good credit by the time they're 18. They can go out and get a house with $0 down in their name, no co-signer, no down payment, a $500,000 house. Payments probably gonna be $800 a month or something for a mortgage because you were smart about it and you put your kids on your credit. You had bomb credit and you kept up with it. Don't put them on there if y'all not gonna keep up with it. If you have terrible credit, do not put your kids on your credit. If you're trying to set your kids up for success though, and you're doing okay in life and you can keep that momentum going, then for sure I would recommend putting your kids on there. If you want to wait until they're 15 or however that goes, do that as well. Okay, that part was long. I feel like that was just very informational. Somebody needs to know about some credit information. And I feel like that's a lot of things that people just don't know how to use. They don't know how to use it right. You can say, oh, I got $1,000 credit limit, but are you using the whole entire $1,000? If so, you're dumb. Like that's not a flex. It's just different levels to it. So that was a lot about credit, and it's still some stuff out there that I'm sure that I missed. But we're gonna always come back with one of these episodes telling y'all how to save some money. So we're gonna go ahead and get into the next section. The next one is gonna be talking about saving and budgeting. So this is another thing that a lot of people have struggles with, or that's like the major factor in wealth building. Because if you don't know how to save and you don't know how to budget, you're never going to have any money. You're never going to have any money. It don't matter how much money you make. You can make $1 million an hour. $1 million an hour. You don't know how to save or budget. You're going to be broke always. I promise you that. You're going to be irresponsible, broke. It's not going to work. So let's go ahead and get into the savings and budgeting. The question, I guess, says, do you have a savings account or does your savings live on Cash App? So let's be real. Let's be real. I want to know. Anybody that's watching this right now, let me know in the comments if you're brave enough. Let me know in the comments. Do you have an actual savings account with the bank, or is it just on Cash App or on the Chime? So let me know that now. Me personally, I have both. So right now it doesn't live on Cash App. I will never put nothing on no Cash App, but I have Chime. So as of now, for me that works with Chime. That's my online banking. We'll get into that later. But that's what I use. I haven't had no issues with it. Love it, like it, good. Y'all use Chime. But I also have like actual banks. I have a credit union, I have a Navy Federal. Who else do I have? It first. So I have like different banks that I have with accounts with. So that's just me. But it took until I was probably like 18. I think I was 18. And I used to hide money. I'm not gonna tell y'all where I used to hide it at. But I used to hide money in the house, and then I guess one day I was just in a rush or something, and my mom seen where I had hid it at, and she was like, "Girl, how much money is that?" And I had told her, and she was like, "Oh, you have that in a savings account, and this, and that, and you need to go. Da, 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 da. Do you have a bank?" And I've not had a bank since I was 18. So she was like, we're gonna go get you a bank. I only had a savings account, I guess, technically, because I used to work. So then my dad helped me set up a savings account, and I would put my money into there. So yeah, that was that. But I never had like an actual debit card at 18 years old. I just always had to go to the bank. I had a bank card. That's what it was. Go to the bank, go to the ATM, go pull the money out. And yeah, then you use the cash. That's what I had. When I was 18, my mom took me to the bank. We went to go open up actual checkings and savings account. And then I had a debit card, and that was that. But I feel like everybody should have those two. You should have online banking, and then you should also have a regular bank that has people there. You walk into something, you can talk to somebody face to face. You need to have that as well too, because all this online banking, you don't know who you're talking to. At the end of the day, you don't know what's going on, where your money is for real. So for sure, you always need to have a bank. But that is a whole nother section. So we're gonna go ahead and get back into the savings and budgeting. So it says, do you think you need a lot of money to start saving? Personally, no. You can start saving with a penny a day. A penny a day, you don't have to add on to the days, but you can just do a penny a day, literally. Now, that is the slowest way to save, but like I said, you can start with that. Me personally, I started with change. So, like, any change that I have in my purse, any change I have in my backpack, any change that I see on the streets. I don't pick up all change on the street, but if I see a penny or something and I just feel good that day, I'm gonna pick that penny up. So I just start grabbing all my change and putting it in the little jar. That's where all my change goes. And that ended up being my passport fund, and that's how I bought my passport, with that change. So change adds up, and it only took, I want to say, probably like 2 years max, two maybe three, because I'm still adding up in there. So now it's like even more. That's one way to save. I also have like an actual savings account on my online banking. I still have savings accounts on all my actual banks. So yeah, for me personally, the best way for me to save is to just take it out and forget about it. So that's why I do a change jar, because I can take out $20, $100, $5 change. I can take out change, dump it, and put it in the jar, and I'm not even gonna think about it no more. But I got this other money. If I can see it, I'm gonna think about it. So that money is kind of hard to save, but I can still save it. I budget a lot of the times, and I'm real like strict when it comes to me doing like my no spending type things. Like if I know if I have something coming up, it took me a long time to get there. It took me until actually I was making like money to learn how to save. So when I first started making money, the first thing that I would do was I wouldn't buy nothing luxury or extra or anything like that unless I had double the amount. So if I'm about to go and spend $500, I need to make sure I at least have $1,000. This is back when I ain't had no bills. So that's what I would do to be able to go and do that. So it's not like I'm spending my last, because now I still got $500 to go do X, Y, and Z with. But that's how I started saving. Once I ended up getting bills, I figured that wasn't working. So I had to come up with a new saving method. Me personally, I give myself a budget of $200 a month. That's what I can spend on hair, nails, makeup, anything like that. I can spend it on. As far as like out to eat food, I give myself a budget of really like $75, because out to eat food, it's not good for you. And I'm on a health journey, so I'm not trying to really spend over that. But I just give myself a budget. I go through what my mom taught me how to do with budgeting. She told me go through the last 3 months of your transactions, tally up everything, see how much you spent in that month, and then see where is it going. Put it all in categories if you need to. Me, when it comes to like organizing, I'm type A. So like everything has to be category. If it's all like rent bills, all bills is category together, all entertainment is category together. The question on here says, do you pay yourself first or do you pay bills first? Me personally, I do pay bills first and then I pay myself first, but I guess technically I learned a different way to do it. Instead of paying myself first, I just budget myself into my bills. So I am a bill. Me personally, I am a bill. And technically, sometimes I do go over that budget for my bill because I'm just expensive. I can't help it. But yeah, for me to budget is it's easy for me, okay? And it's easier now for me to stick to it. When I first started, it was hard as hell. Okay, like yeah, I budgeted. This is now I know what I'm spending on, but I don't know what I'm spending on. If you go to Starbucks every week, you need to put that in your budget of you, or put that in your budget of out to eat food, because Starbucks every day, every week adds up. Trust me, I know. I done spent at least 100, maybe $200 on Starbucks in 1 month. So it adds up. And once you see like what you're spending your money on, you will see if it's necessary, like how much money you're spending. You go through your 3 months and you figure out you're spending $21 on Netflix, maybe more, it depends. But you pay your money for Netflix and you're spending $21. Is that worth it to you or not? 3 months, you figure you're spending $400 on clothes. Y'all, I learned that I spent $300 on clothes last month, on top of the fare, on top of everything else. Like, I bought the fuck out. Last month, I did not have a budget, okay? It was, I see it, I want it, I like it, I got it, okay? That's what all last month was. But this month, I'm like, okay, I know I got some shit coming up. I need to lock in for real. I'm like, I know I can make that money back. Well, I can't make it back as of right now, but I know I can make enough to do what I need to do this month. Because this month is very busy, so I know I need to get it together. As far as like my budgeting wise, for me personally, what helps me is I go on these strict, like, no spending, no going out, no doing this, no doing that. When you look, I was spending, I want to say $200-300 a month just on going out, as far as like clubs, alcohol, outfits to go out in, certain things like that. I was spending money. Now, granted, I make enough money to do that and still not be broke, thank God. But or maybe I just know how to budget it just a little bit better. But like I was saying recently, I just didn't like the way that my bank account was looking. I have like a secure amount that I like to see every day, and if I don't see that amount, I start freaking out. I start stressing. It just ain't right. It don't sit well with me when I don't have that amount in my account. That amount for me is like, I would say like $2,200. So if I don't have $2,200, I start freaking the fuck out. Like, it is not okay. It's in an emergency. My mood is bad. Like, that is my emergency. $2,200 is my emergency. I wouldn't say that's about 3 months. It's probably more than 3 months of expenses. But is that more than 3 months of expenses? 2,200. That's at least more than three times the rent. I'm like, three times the expenses. That's crazy. That's not my expenses times three. Like, I don't know what the fuck that is. $2,200 is my safety net. I feel like that's not three times my expenses, but that's my safety net. That's gonna at least make sure that three times of all my bills that I need to get paid is paid. Okay, so and make sure that you have like literally everything budgeted out. That's really all it is. You don't have to be rich to have a savings account. You don't have to be rich to budget. You just have to budget. You have to budget, and then you have to make sure that you're making at least enough money to be able to do that. And my mama would say this all the time. I make enough money to pay my bills. Okay? To pay my bills. Savings is included in paying my bills, but I make enough money to pay my bills. Once I hit that threshold, I'm clocking out, I'm checking out, I'm not here, I'm not doing it, it's not gonna work. That is me. I don't work extra for nobody. I work extra for me. I don't work extra for nobody. Use automatic deposits. I personally use that. Direct deposit me, okay? DD me. Direct deposit into that motherfucking account. That is the easiest, fastest way for me. I love it. Nowadays, you can get paid 2 days earlier, so I like that too. It's a lot easier to move money around. You can do a direct deposit into a traditional bank. Also, your jobs that you work at, most of them have 401ks. Most of them match it. Most of them just put you in there. A lot of the jobs that I've had, I never set up a 401k ever before in my life. I've had three so far. So most of the time, jobs they will just put you in a 401k, and then I guess they'll be putting money into it. But if you don't put money into it either, then they're not gonna put as much money into it. All of the jobs that I've been at, like I said, they've had 401ks. I done cashed out. Like I said, it wasn't a lot. I think the most I've cashed out on was like $300. I stayed at the job for probably like a year or less than, and that's what I made in a 401k. So for sure, make sure you do 401ks, make sure you do investments. That's a lot of things that people just our age are not thinking about, but then they think about it in their 30s and 40s, and it's like, damn, if I would have known this in my 20s, I could have been right here right now. I could be this right now. You could be. So listen, do it down. Emergency funds, that is another thing that we definitely need to talk about. You need to have an emergency fund. You can have $5,000 in your account, whatever. But if you don't have an emergency fund, what are you really doing? An emergency fund is for an emergency. So it's like your tire went flat. Now you need a new tire. You can dip into that emergency fund. Your car, something is wrong with it. Now you got to go spend however much money on your car. That's what you can dip into your emergency fund. And your emergency fund is separate from your savings. Your emergency fund is separate from whatever you have in your account that you just be spending on. Your emergency fund is separate. It should be a separate account, maybe even a separate bank if you have to. Maybe you should use just like one bank for an emergency fund. I don't know, whatever is going to help you. But an emergency fund is separate from everything, and that's just what you have to dip into in case anything does happen. You have to pay to go to a funeral. I don't know, and it's an emergency. That's what you can use to dip into. The moral of this budgeting thing is budgeting equals freedom. So once you know how to budget, you know how your budget goes, no matter how much you're making, you know what you need and how to budget, then you can take that and you can become financially free. Trust. So now we're going to get into banking. Okay, so this digital banking versus traditional banking, I'm just basically going to go over real quick. You got some pros and cons on it. So, banking. Are you an old school banker, like you want to go and see a teller, or are you just more like new online, hip person who wants to do online banking? Like I said earlier, me personally, I have both. I started out with traditional banking as far as like you go in there, you speak to an actual person, you sit down, have a conversation, things like that. I've actually done. I love that. I love actually being able to speak to a person, especially when I'm getting things done at a bank. I feel like that's serious. I don't want to talk to you over the phone. I need to talk to you in person. So I love going to be able to go to a bank and do that. And I've been blessed enough to have banks that are like credit unions. Credit unions help with a lot of things. I also have a Navy Federal. Y'all who know about Navy Federal know about Navy Federal. They gonna get the job done. So we're gonna go ahead and go through first the pros and cons of both the online versus traditional. So let's go ahead and we're gonna start into the traditional banking. Like I said earlier, pros of traditional banking is you can get that face-to-face contact. It's easy with the cash handling. You go in there and say, I need $50. They can go out, give you $50 in ones, $50 in fives, tens, however you want it, or a $50 bill. They're trusted and they're also familiar. So, like I said, your neighborhood bank, maybe not your neighborhood bank, but like maybe a bank branch that you have in your state, country, wherever you're at. I would recommend that. Those are the pros of that. The cons are they have limited hours, so it's not just 24/7, maybe like an online bank is. They do have higher fees, and then they also have slower processes. So things take days rather than online banking. You may can get it done in a day by just talking to somebody over the phone for like 30 minutes, whatever. So that would be the pros and cons of traditional banking. Let's go ahead and get into pros and cons of online banking. So online banking pros is, of course, it's 24 hours, like I was saying, 24/7 most of the time. You can at least talk to somebody and be able to figure out something, whatever it is that you're calling for, probably at like 2 o'clock in the morning. And you can do that. Usually, they have lower fees and higher interest online banking do, which is lower fees because a lot of the times, like traditional banks, for example, they have overdraft fees. And my bank personally, I think it's like $20 or $25, and that's every time. So every transaction that goes beyond your limit or whatever you have in the bank is going to charge you $20. There was a point in time that I was paying like 100 and some dollars in fees because I was overdrafting. So yeah, it's every time it's like $20. That shit was crazy. But as far as like online and what I have now, if I overdraft, it doesn't charge me anything. So yeah, I like that. I don't like because I do overdraft sometimes. Shit happens, or I just don't want to put some money over. I don't want to move money around. That's most of the time when I'm overdrafted. I don't feel like moving money around. I know that I'm gonna get paid eventually, and when I get paid, it's just gonna take it. So I'm okay with that. Don't be like me. Do the responsible thing. Don't overdraft at all. But yes, that's how I do. So the cons of online banking, of course, is you can't have that face-to-face interaction interaction, so you can't interact with a real person. You're just doing everything over the phone. There is always threats that are involved as far as like security risk and hacking and stuff like that. And you also need internet access. Of course, you're not going to be able to access your bank or your money unless you have internet access. And if you don't have internet access, then you ain't got no money. So we're going to talk about the importance of FDIC coverage. And FDIC, I'm not really sure what it stands for, but I know it is federally insured money. Most banks have it and they're protected by it. And what that means is basically, my bank specifically, it means that my money is insured up to $250,000 is what it says. So if anything happens to my money while it's in the bank's hands, in the bank's care, then I can get up to $200,000 back. But the only negative part of that is if I have $1 million in my bank account, something happens to it, whether it's fraud, whatever, they done hacked it, somebody done got the money, whatever, it was a bank error, I'm insured up only to $250,000, meaning I done lost $750,000 and I only can get back $250,000, which is $250,000. That is the only thing that is the con of that. But federally insured, I would go with. Online banks, they're not federally insured, I don't believe. But I do know that most traditional banks are, and that is a good thing to have. Most people don't know that or know nothing about that, but that's something that I seen like a long time ago, and I was like, that means I gotta have like 10 million banks because I can only get this, and that. But yeah, so make sure that you guys are looking out for that. Make sure that your money that is in a bank, whether it's online or traditional, it is federally insured, meaning the government will pay you back. The government will pay the bank and the bank will pay you. The bank doesn't pay you, you're gonna have to take it up with the government, and the government's gonna probably fine and sue that bank, and then you're still gonna get your money. It also says another thing that we should know is use alerts to track your spending. Me personally, on Chime, every time I spend anything, whether it's in online, in store, it's always gonna pop up on my phone. If it doesn't go through, it's gonna pop up on my phone like, hey, this is why I didn't go through. It's gonna even send me text messages sometimes to ask if this is me trying to purchase something, and they're gonna make sure that it's me because it may look like fraud. So make sure that you guys have that on. Make sure that you guys utilize that because that is another thing that can help you protect your money. So we're gonna move on from traditional versus online banking. Hopefully you guys have learned the difference between them and you learned which one may work for you best. Or maybe, like I said, you need to have both. Even if you're old, you need to learn how to do it because that's just the new times. So we're going to go ahead and get into the next thing that I think that you should know about wealth building and building your wealth. We're going to talk about negotiating next. I feel like negotiating is an important part of learning how to build wealth because anything is negotiable. Everything is negotiable. You can barter and sell. That barter system is still well alive to this day. As far as things like your car, your house that you buy, your job when you're going to negotiate for pay, or some people don't even negotiate for pay. They're just like, yeah, I need this, that's what it is, or no, I can't do that, whatever it is. I always negotiate. I'm a negotiator. I'm going to see what I can get up out of you. So I feel like negotiating is a big thing that we got to learn about. So some points that I wrote down were, if you're not negotiating, you're leaving money on the table, period. Like, you closed mouths do not get fed. Okay, that is the moral of this negotiating section. Closed mouths do not get fed. Negotiating is a major thing that you just need to have in life. You can negotiate phone bills, you can negotiate rent, you can negotiate, like I said earlier, your car, your house. You can even negotiate credit card interest. You can negotiate anything. But in order for you to be able to negotiate, you have to do your research. You have to do your research. You have to know your product. Know whatever you're talking about. You have to know the worth, the value of that, the true value of that, what you feel like it's worth. If it's you personally, you have to know your worth. You have to be polite but firm also. And then you also have to be willing to walk away from the table. Walk away from the table empty handed, or walk away from the table just in general at whatever that the other person is offering. Just because they said that they're starting to hire you off at $14 does not mean that you have to get paid $14, especially if you know that you're worth more than $14. Now, some of these people think they're worth more than they are. Don't let ego get in your way and stop your blessing. Now, check yourself at the door. But if you are actually worth $14, then go ahead and get your $14, girl. But for me personally, it was just as like a job experience. I done had to negotiate quite a few actually, and I never get the base pay. I always get more than the base pay. If I was to go for a job right now and it's maybe a manager position, they're offering $16 an hour for that manager position, but I have to do X, Y, and Z and all this other stuff. Me personally, I'm going to try to negotiate that. If they're willing to give me the job, I'm going to try to negotiate that pay, because $16 is not going to work for me, especially since I know how to manage. I've been a manager for years now. I have experience under my belt. I know how to do certain things. So I'm not going to take $16 because I know for a fact I'm worth more than $16, and I know for a fact $16 is not going to pay no bills over here. So I'm going to go and I'm going to negotiate for more. Usually when I negotiate for more, I start off high and then I work my way down. So say I want $21 an hour. I will take fucking, the lowest that I'll go is probably like 19. I'll take 19. 1875 is probably really the lowest that I would go, but I would probably start at 21. Usually they'll tell me either they have a cap or they don't. If they don't have a cap, or they're like, maybe we can work with that, that's what I can do. You can, closed mouths do not get fed. It is no harm in asking. You don't have to ask as far as like being rude. Like I said, be polite but firm. And you just have to know your product. Know your product, know your word. Be ready to walk away or be ready to lose that customer. But you also have to know what you want. You have to stand 10 toes, be firm. So that is going to be all about negotiating. Like I said, it is important. If you have any tips or any steps that people need to follow or could follow in order into negotiating besides the ones that I just gave, let us know in the comments down below. But we're going to go ahead and move on into the next section, talking about collateral, portfolios, and assets. So let's go ahead and get into that. A lot of y'all probably have never heard of those words before just now, when I've smoked them into existence for you, but you're watching this episode for a reason. And it's probably so you can go ahead and get all this information, this good information down that we're going ahead and letting y'all know. So let's go ahead and get into what an asset is. An asset is something that you own. An asset is, say, like a house. An asset is a car. An asset may be jewelry, art, certain things like that of high value. That is an asset. Collateral is something that you can use against something. So say I wanted to go get a $10,000 loan and I have a car that is worth $10,000. I can use my car that's worth $10,000 on that $10,000 loan as collateral. Meaning, if I don't pay them back that $10,000 or I default on that $10,000, they can go ahead and repossess my car and use that car and try to sell that to get whatever money that they can get back, that $10,000 loan that I did not pay back. So that is what collateral is. As far as portfolio is basically an investment book. Well, I would say an investment book. That's what I'm using this for as far as wealth building. There is like art portfolios, things like that, but it's basically like a book that you can flip through and you can see what someone has done, or you can see what someone is into as far as business and wealth. You can go through and you can flip and see what kind of investment you have, where your money's going. For as far as wealth, it's not really like a book. It's more of like a figure of speech kind of a book, but it is like a profile with all of your investments and stocks and bonds and where your money is basically what it is for wealth building. So it says, do you have a portfolio or you just keep saying one day? Me personally, I do just keep saying one day. I don't have a portfolio right now because I'm not too sure in how to get into investment. I feel like I kind of have an idea what it is, but I'm just not too sure. So I just don't have a portfolio right now. My mom, she has a portfolio. She has all different kind of things and assets, stuff like that. She has in her portfolio. I just don't have one yet. I do feel like that is something that's necessary for a business person to have, or just for a wealthy person to have. If you can ask any rich person what is in their portfolio, I bet you they know what it is and they can tell you what's in it. Anything that makes you money, it would all go into your portfolio. That's what I'm talking about as far as like wealth. So anybody who wants to build wealth or generational wealth, we're going to have a portfolio. So if that's what you want to do, go ahead and get your portfolio on. We're going to go ahead and move on into the next thing that I think that you should know while you're trying to build your wealth. And that is basically, which one is better, buying a car or buying a house? Which one do you need to buy first? There is a lot of grown people out there. And I say grown as far as like 21 and up who don't have a car. There's a lot of grown people 21 and up who do not have a house. There's a lot of people 50 and up who do not have a house. So I do feel like this is an important thing to know. The house is going to be better for you. Of course, you need a car. I feel like if you're going to get a car and you're still needing the house, get a car that you don't have to put on payments. Get one of those buy here, pay here cars. Go ahead and save you a $5,000. Go ahead and get that car for $5,000. Drive your hoopty, buy your hoopty, so you can pull up into a fucking mansion or whatever your dream is. But you just have to drive a hoopty around. You can't be driving a Mercedes around and you don't own your own home. You're renting. I'm gonna look at you like your priorities. What is going on? Cars depreciate, homes appreciate. They gain in value. And like I said earlier, it's going to be ownership versus image. So, like I said, if you're around driving in a Mercedes, but you own an apartment and you still pay on that Mercedes, or that Mercedes is a lease, I'll be looking at you like, what the fuck are you doing? Like, you're just wasting money. You're wasting money. That's what you want to do. Like, I just don't understand it. Get your priorities together. All right. So, the next thing that I feel like we should bring awareness, or that everybody should know on wealth building, is the rich people playbook, is what I'm going to call it. The Rich People Playbook, just notice how like rich people move differently. I'm going to tell you guys a few different things on what they're doing to either maintain their richness or just to get rich. First off, we're going to start with all millionaires, rich people, whatever you want to consider rich, wealthy, they all have multiple streams of income. It's not just one job and that's how they got rich. Millionaire has 7 streams of income, and ever since I've heard that, I've been trying to get that 7 streams of income. So as of right now, I have technically 4. I'm 3 away, but those other 3, I want them to be the 3 that make money while I sleep. So I'm still working on that. That is as far as like investments, they can make money while you sleep. Like I said, buying land that can make money while you sleep. So I need 7 streams of income, and I have 4 right now. Y'all help me get the other 3. They do have 7 streams of income, at least multiple streams, not just one. They do more investment rather than consumerism, and consumerism is basically what we are. I'm not gonna say we, but basically what the average human or average person is. They're going to go out and spend rather than go out and invest, rather than a rich person or a wealthy person. They're going to more than likely invest. A rich person is not going to be dressed up in head to toe Gucci, head to toe Prada, head to toe whatever the fuck, Balenciaga. They're not going to be head to toe dressed in that. They're going to probably have on a fucking, we could say $600 shirt, but the $600 shirt is going to be a plain shirt. They may even have on a Walmart shirt. Walmart shirt, Kohl's pants, and some Walmart shoes. And that's how the rich stay rich. They're not out there flexing all the time, should I say. Now, when they do step out and step out nice, they may have on a product suit, or, you know what I'm saying, a $10,000 suit. They may have that. But as far as like an everyday type thing, it's probably just going to be something that's $500 or less that they have on. Another thing is they also use money to make money. So, of course, investing, that's using your own money and putting it into something. Investing in your business, investing in the stocks, bonds, all of that. They're using their own money to make them some money. It may take them a little bit longer, but it's still making them money. But that's going to be all for that. The real most important one was the different streams of income. You cannot just think that you're going to have 1 to 2 incomes and that's how you're going to make it. That is never how you're going to make it. You can make like your little millions and have 15 minutes of fame that way. But as far as generational wealth and making that last, it's not going to last. Okay, so the next one we're going to talk about is generational wealth and legacy. So like I said earlier and all throughout this episode, we're focusing on building generational wealth. We're focusing on making sure that your great, 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 great grandkids have money, have a opportunity, have a start, have something better than maybe what you had. So it says we talk about breaking curses, but are we building wealth? That basically means yeah, you can break your generational curses as far as like healing and emotional wise, but are you breaking the generational wealth curses that you have? You were born into poverty. So are you going to make your kids be born into poverty and then their kids are going to be born into poverty? Or are you going to be the person to step in and say, hey, maybe I should learn about this? Or hey, maybe I should, if I couldn't set my kids up, maybe I can set my grandkids up for success so they won't have to start from zero. The goal at the end of this episode is making sure that our kids or our grandkids never have to start from zero. You started from zero, so you should not want them to start from zero just because you did. You should want better from them. You should want them to actually have an opportunity to be able to do a lot more than maybe the next person can. So the first thing is going to be learning. So you have to learn about different things far as like financials, you have to learn about that. You're not just going to know it overnight. It is going to be a process. But start learning it now, start putting time aside. Read a financial literacy book, read financials for dummies or something. I don't even know if they still make those kind of books. Read something, Google it. Now they got Chat GPT that bitch. Figure it out. It's not hard. All you have to do is Google, ask the right questions. Once your brain starts working, you should be able to get it there. Okay? Asset plus education plus access equals general wealth. So if you have all of those, then you get generational wealth. Like I said, access. You didn't have the access. If you can start your kids, your grandkids, your great grandkids, and you can give them that access to know that education, then you can set them up for life. For Black families, it's about ownership and passing it on smartly. A lot of Black families do not know anything about finances. We weren't taught finances, and that just stems from years and years of slavery and oppression. But as far as like now, there's no excuse. Now you have all the same needs and opportunities as everyone else. Yeah, you were brainwashed into thinking that you don't deserve it, thinking that it doesn't belong to you, brainwashed into thinking you can go out there and you can have the same opportunities as them in a certain way. Please don't come for me. Y'all let me finish what I'm trying to say. You can have the same opportunities as them in a certain way, but you have to be the one to take it upon yourself to want to learn it. They're not going to tell you just like how they told their kids. Okay, you have to go out there, Google all the information, learn all the information that you need to learn, and you have to tell your kids. You have to do the same things that they're doing. They learned because their parents knew and their parents taught them and they taught their kids. So y'all have to know so you can teach your kids and teach your grandkids and the generation can just keep teaching each other. That's how we're going to break the cycle in our families. But the key things in generational wealth in protecting and building that legacy is going to be trust. Protects your assets and it avoids like probate. Anybody who's dealt with death, you know what probate is. It's very extenuating. It's a long process, and you don't want to have to do it. Nothing like that, especially after someone has passed away. So trust is a lot better and easier. You won't have to do it all. So it says life insurance create tax-free wealth and fund family goals. I'm not really sure how life insurance works. I know As far as like if you have a life insurance policy on somebody and you're the beneficiary of it, then you get paid out upon their death, whatever you I think you get that money like ASAP, to where if you do need to plan a funeral, you can use that money for that specific funeral and you won't have to go into debt for that. But a lot of the times when you get life insurance policies, they're more than what the funeral would cost. So that life insurance policy can get either your family out of debt or can use them, they can use it for other things. They can, whatever they're going to use it on, whether that's going on vacation, getting out of debt, buying a house, whatever, they can use that money for that from your life insurance policy. It says gifting. AU attracts free transfers. Teach your kids that at a young age. That's how the rich stay rich. Like, are y'all listening? They gift a lot of the times. All that charitable stuff or all that stuff they be giving away. Drake did that God's Plan video, and that whole entire video was a tax write-off. And he did it towards the end of the year when that video had came out. It was all tax write-off. So when you give to charity, that is considered a tax write-off. I don't know if I can say this, but build a charity, put it in your kid's name, and put money into it every month, every however so often you want to put money into it. And you can use that as a tax write off since it's the charity. And then that can be an account for your kids for whenever they turn 18, they can use that money to go and do whatever the fuck they want to go and do with it. I feel like everybody thinks that you have to be rich in order to be rich. You don't have to be rich. You just have to be smart. These people are smart. That's all it is. They're smart. They're figuring out their loopholes and they're paying attention. They're studying. They're looking up. And they were also taught this stuff too at a young age. Y'all know what people I'm talking about. So, another point that I also wanted to just make sure that I spoke on or said in this video, for us, this isn't just about getting rich. It's legacy work. This is not luxury work. It's legacy work. We're rewriting history. This is something that is still rare, still unheard of. For Black people to be able to have wealth, for Black people to be able to do X, Y, and Z, it's always like a shock. So I feel like you owe it to yourself, you owe it to your family, your future generations, your legacy, to start acting now, start being smart now. I know a lot of people who have ran through a lot of money at the age that we're at now. And instead of investing it, instead of doing anything with it, they didn't do anything with it. And all they can say is they touched it before. They ran through this before. They had this amount of money at a certain time before. That's all they can say, because as of now they don't have it. Sure, they can get it back. Sure, they can still run through it again, but they're not doing anything with it. They're buying things that are depreciating in value rather than appreciating in value. And they're still, it's just not clicking. They're doing it for a flex. They're not doing it to build generational wealth. So, another thing, so that is basically going to be all for this episode today. I hope you guys really learned a lot. I hope I was able to teach you guys a lot. And like I said, this is just some of the things that I just knew for sure I needed to get off my chest and let you guys know, because I feel like a lot of people don't know certain things about this. So yeah, I just hope that you guys got some little key gems that I threw in there. I hope you guys were listening and paying attention. You don't have to be rich to start. You just have to be intentional about starting. Like I was saying earlier, you have to actually take the time out and learn about certain things and learn how to make your money work for you. So takeaways from this, I want you guys to keep learning about finances. Hopefully I sparked your interest. Hopefully I said something that you didn't know and you learned something today. If you did learn something today and I said something that you maybe didn't know, go ahead and put it in the comments today. Go ahead, tell everybody what you didn't know, maybe what you have learned from this episode, and put it in the comments. Let me and everybody know that you were paying attention, that you did take away from something, and that you got some notes, and that you will be intentional to do better. But that is the end of the episode. Make sure that you guys like and also subscribe. Make sure you also hit that notification button down below so you can stay updated when I drop new videos like so. I will see you guys next time. Hope you guys have or had, should I say, hope you guys have a great holiday. And yeah, I love you. See you later.